You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market, from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. That rockin' tune means it's time once again for the option block, everyone's favorite bi-weekly source for all things options related. My name is Mark Longo from the OptionsInsider.com, as well as, of course, from a little thing we like to call around here, ye oldie Options Insider Radio Network. Quite a few programs, 14 to be precise right now, for your listening pleasure. That last one, number 14, coming soon. I was just listening to it before the show, so we've been able to listen to it. We're going to make it live pretty soon. In fact, we're going to record the next episode. That was a bit of a sneak preview, a sneak taste. Going to record the next one live tomorrow, 3 p.m. Central. Make sure you tune in to get your dose of all things futures options. The program isn't called, indeed, This Week in Futures Options. If you like what we do with the odd block here and we apply it to, your Facebooks and your Googles and your SPYs and all that fun stuff, we're going to do that now for corn and crude oil and gold and all that other crazy stuff. We don't really get a chance to talk about that much here on this program, but I know a lot of you are really interested in, particularly the crude and the gold and, of course, the S&Ps and the other stuff that goes out there as well. So a lot of fun stuff over there on the old This Week in Futures Options. Check it out live tomorrow and coming to the network very soon once we go through all the myriad processes for approval over there in iTunes and Google Play. By the way, up on Google Play now, our network. So there you go. If you're an Android listener, of course, you can check us out there on your device of choice. And if you're writing into us saying, hey, I still don't see it on my device of choice, don't blame us. Blame Google. They roll everything out in a very slow and laborious beta process. So we're live. It's just a question of whether or not your handset has been approved yet. So keep checking if we're not up there. And, of course, iTunes, all the other fun stuff. And, of course, maybe even easier, our mobile app available for iOS, Android, and the beloved Fire OS. All right, and joining me on the old program today, let's go in order of proximity. Let's start off in the hinterlands with a little sleepy hamlet we like to call St. Charles, Illinois, where we are joined by the beloved Uncle Mike Tussaw from RCM Wealth Advisors. Uncle Mike, welcome back to the program. How you like that for a lead-in, beloved?
It's always good to be beloved yourself, Mark.
Wow, I think someone's falling off of his table or his chair or something somewhere, which can only mean one thing. We are joined by the greasy meatball himself, Mr. Mark Sebastian. Mark, welcome back to the program.
Good to be here.
What are you falling off of today, and where are you?
I was moving something in the kitchen. I'm sorry. I'm in one of the 10 towns that shaped the world, Riverside, Illinois.
Yes, when I think of my history books as a child, Riverside was always there, deeply in the appendix. All things, Rome, all roads lead to Rome. All historical events somehow originated in Riverside,
and now you're
Illinois.
claiming it's just Riverside. Now, which is it? Is Riverside its own town, or are you Chicago?
Riverside is its own town, but it's right next to Chicago it's about 2 miles from the border. So, but it's a good time.
And guess, am I also seeing, are we still joined by the Rock Lobster, or are you hopping off, sir?
No, he's leaving.
He's leaving. That's what I thought. So he's still smiling at me from the screens. I wanted to give him a chance in case he felt like saying hi to the people. I'd give him a chance. But now he's gone, and we got to keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for The Trading Block.
All right, everybody, welcome to The Trading Block. Like the name implies, this is the portion of the program where we break down what was moving, what was shaking in today's market activity, as well as, of course, what's firing off after the bell here, and a lot of that in the latter category today. We're going to get to that in a couple of minutes. Indeed, a lot of earnings popping off today. It's one of those big days for a lot of our listeners out there who like to trade a lot of the retail-friendly names out there, the GOOGs, the Softies, the SBUXs, and so forth. We are recording this, of course, on Thursday, April 21st, for all of you playing along. And, of course, also streaming live via the Mixlr chat room. So for all of you out there who are able to join us here on Thursday, 3 p.m. Central, hop on in live, and we want to thank all of you who are doing so. And indeed, we tweet out the link every week before the show and things like that, too. So you can always find a way to hop in. And the good thing about that link is it never changes. That's our link to our chat room. So you can hop on there anytime you want. It's only going when we're on air, of course, but you can save that link, bookmark it, so you can always hop into the chat room whenever you are so inclined. These days, we typically stream this show, Option Block, Mondays and Thursdays, 3 p.m. Central, 4 p.m. Eastern. Vol Views, Friday, noon Central, 1 p.m. Eastern, and that newest edition, This Week in Futures Options, 3 p.m. Central, 4 p.m. Eastern. So quite a few selected items for your streaming pleasure. More to come, of course, as we get more shows going in the live. Of course, some of our compliance restricted partners have a challenge with live, but we're working them up to it. Don't worry, listeners. And as you mentioned today, a bit of an off day on the old street today. Most of the major indices off about 0.5% or so, except for the tech-heavy NASDAQ. That one, a bit of a laggard to the downside today, only off slightly on the day today. And, of course, a little bit of downside on the screen. VIX cash finally taking a bit of ye old inhale, up nearly a little over half a handle or so to about 13.85 right now. Get a little bit closer to our Vol Views predictions from last week. We still have one more day for those to come to fruition, but all of us, I think, we're firmly in the higher camp than what we're seeing right now. Either way, it's time to dive into today's activity. Let's kick it off. Mr. Greasy Meatball, a.k.a. Mr. Kitchen Sink there. What caught your eye in today's activity, sir?
You know, a little bit of a slow one, kind of a breather, a little day off. Not a big move in VIX. VVIX, which is the VIX of VIX, actually down today, but, you know, a little bit of a pressure in the Dow. I would say the area that got really slammed the most was the airlines and the transpos, because UAL just dropped a huge poop for earnings. Also, XLU, the utility index, down 2% today. Wicked move in bonds over the last couple days. That's really what's pushed everything around, and that's really where I think that, you know, we probably saw a lot of the weakness from was the interest rate products.
And Mr. Uncle Mike, same question for you. A little bit of a quiet one. I think it's going to pop off a little bit after hours here in a few minutes. But while we get to that, while we're waiting for those numbers to come out, what caught your eye in today's activity, sir?
Absolutely. Yeah, Apple had some news today that iPhone sales are looking to be not so good next week at earnings. So Apple's down 1% today. But other than that, I would say it's definitely been more of a quiet one, just kind of going up and down my screen of some stocks that we look at, do some things with. Verizon had earnings today, and so they're down a little over 3%. That's actually a stock that we've been doing kind of a small position, doing a little wheel trade, so we were able to sell some puts to get back into that. And then, yeah, I agree with Mark. There's a lot going on in the interest rate world, and but what's exciting about right now is that today there's a lot of stocks to talk about because it's earnings season, and we don't necessarily have to dedicate a whole show to what the Fed might do.
Indeed. Let's get into some of those individual names. A lot of them popping off here after hours. One of the big ones, of course, GOOG/Alphabet/ call it whatever the hell you want. Popping off here in the after hours. We started looking at this one earlier this week. At the time, they were pricing in about a $39 or so move around Monday when we first asked this question. It expanded a little bit to about 41.5, but stayed pretty much in line right around that 5.5% or so level they were pricing in. Similar percentage level on the Alphabet side as well, the Google side. And it's interesting. And of course, we had that was our question of the week. So we had it timed to expire right in time here with the earnings today. So I'm curious to you guys, if you don't look at the notes and cheat, We asked our listeners if they thought that $39 straddle, how was Google's earnings going to stack up to that? Was it going to blow the doors off? Was it going to mildly outperform? Was it going to slightly underperform? Or going to dramatically underperform? Uncle Mike, we asked you last time, so I'll let you go second this time in case your view has evolved. Mr. Greasy Meatball, we'll start with you. Where do you think it's going to go? And then B, where do you think the listeners picked?
You know, I'm up in the air. I'm going to say that I think it's going to go, lower.
So underperform, you're saying?
Yes.
Slightly underperform? Okay, so you put you in the slightly underperform category. Uncle Mike, I think you said mildly outperform last time. Is that still your viewpoint?
Yeah, especially since right now it's mildly outperforming it.
Cheater, sir, as you're looking at the real numbers. Of course, yes, for our poll just expired, and our listeners taking an interesting and involved approach with about 35% saying blow the doors off. That was kind of leading the charge for a while there. Then the more level-headed amongst you prevailed, and about 46%, so nearly half, coming in on the mildly outperformed side. Again, we were pricing it up at about $39 earlier this week, so mildly outperforming that level, and about 19% slightly underperforming, 0. So no hardcore premium sellers out there in the audience, 0% saying dramatically underperform. And Uncle Mike is right. As we are looking now, the numbers are coming out here for good old GOOG, and looking at about, a little over $39.50 sell-off here. So a little over about 5.5% or close to it. So pretty much at or mildly outperforming seems to be the order of the day here. We're hovering there right now. We'll see if that holds up or if that move develops. We always know the first blush is not exactly the telling for what the rest of the after hours and indeed the next open is going to say here for what's going on. We also saw a good old SBUX reporting today after the hours as well. This one, of course, ticker symbol SBUX, good old Starbucks. This one doing pretty decent. They were, from a volume perspective today, they've been averaging about 33,000 contracts a day, doing over 110,000 today, so over 3x out there in Starbucks land, getting a lot of love out there, closing right around 60.5 out there, and pricing in about a $2.25 move, almost 4% out there in the after hours. And lo and behold, this one, if you picked outperform, we didn't have a question on this one, but you can only do so many questions of the week. But this one looking to be outperforming, at least so far, off nearly $3 or almost 5% here in the after hours, hovering right around the $58 level. So nearly $3 to the downside there on good old SBUX. And of course, the other name we've been keeping an eye on for today, I know a lot of you guys are probably watching as well, good old Softy. They were, they used to be a pretty boring name around earnings time. I used to joke on the show a few years ago, they were kind of a resounding meh when it came to earnings. They were a pretty reliable premium, right? You can really rely on them to not really blow through their straddle pretty often. And usually if you sold that premium, you got usually able to keep a fair percentage of it. It was kind of a lost decade for everyone but option premium writers around earnings when it came to Microsoft. That tale has changed a bit over the last year and a half or so, as it's come a little bit more alive from an earnings perspective. Closing today a little bit south of the 56 handle, about 55, and the orders are so averaging about 110,000 contracts a day, doing nearly 300,000 today. Pretty straightforward breakdown between calls and puts out there, so no extreme bias out there in a paper perspective. And pulling up here, their straddle, they were pricing in about 230, about 240 or so on that straddle. So a little over 4% is what they were expecting in the after hours. And lo and behold, as we're looking right now, pretty much about a $2.40 move, a little over 4% is exactly what they're getting. So who knows? Maybe we're going back to the staid old days of the old school Microsoft. Well, we'll see. Again, this is our first blush, our first take here on some of these names in the after hours. We're going to keep an eye on them as the show rolls along. Mr. Greasy Meatball, I know your chatters are busy looking at a lot of these names throughout the day over there in the pit chat. Any of these really catching their eye today, and any particular trades really lighting it up over there in the pit chat today?
Nothing overly exciting. I know that we were interested in Apple kind of coming up next. We really didn't spend a lot of time on some of the other earning ones. We spent a lot of time looking out at ones that maybe just had earnings. So we've been playing some of the airlines, and then we were also looking at Apple, but not so much some of these other names.
Uncle Mike, you mentioned you were looking at Apple today as well. Any of these other names catching your eye today? And you mentioned you've been doing some wheelies out there and some names, the old wheel trade rearing its head again. Perhaps any of these candidates that are attracting you these days?
Yeah, the main one today that we took action on today, we've had an order to try and get back into Verizon. We've been doing the wheel trade on Verizon for a while now. And we got out, I believe it was last week, we got called away at the 52 level, and just been waiting to get back in and been hesitant to do so just because it's had such a big run lately. But we just put out, this is an advanced technical term I'm going to reveal to our audience, a stink bid, meaning that we're looking to sell the 49 puts for May to get back in at some point. And today was our lucky day. We got filled at 50 cents, and I'd actually love to own Verizon again if we got it put to us. And this is just the classic Wheel of Fortune, Wheel of Fun, whatever you want to call it. Because right now we're short the 49 puts on it. We're actually ahead a couple pennies, which really isn't that exciting. But this is kind of one of those things to where part of me is hoping that it goes down so we can get into the stock at that price. But if it goes up, at least we got paid something.
Yeah, Verizon kind of catching a little bit of some movement of late because they've been named now, of course, in the ongoing list of suitors for Yahoo. Apparently, they want to pick up some of the pieces of that decrepit and bloated old internet franchise. I think even calling it an internet franchise at this point, Yahoo's got a lot of different moving parts. I think what Verizon is eyeing is the content side of the business. That kind of goes hand in hand with, they had an acquisition, some pieces of AOL back not that long ago as well. So Verizon clearly sees themselves as a growing player in the online content space, and I guess they are attracted by at least portions of what Yahoo has in that space. I don't know if they're going to bid for the whole thing or just that portion of it. Either way, kind of weird bedfellows out there, Yahoo and Verizon, but you probably would have said the same thing of Yahoo and AOL a couple of years ago. So yeah, a weird one, and who knows, all this M&A activity, Uncle Mike, maybe it sounds like it'll let you get your puts put to you, and you can get yourself some nice juicy stock.
There you go.
All right, that's going to do it now for the old trading block, but we're going to keep an eye on these names as we keep on rolling into one of my favorite segments because we get into some of the weird stuff that's been lighting it up today. Of course, it's time for the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the odd block.
All right, everybody. That funky tune means it's time for the odd block, the portion of the show where we peer into the weeds and down the dark alleys of the options market and attempt to figure out what's going on in those shady, dark, weird alleys. We're going to kick things off today. It wouldn't be an odd block these days if we didn't have something in the petroleum or the energy sector kicking it off, and that is indeed the case yet again today. Going back once more onto the windmill of Marathon Oil, closing today about $13.86 off, a little over 1% on the day. This is the name that does about 29,000 contracts a day, doing roughly that amount today as well, about 30,000 contracts or so, a little bit more than that. 10 to 1 calls over puts. That should give you some idea of what caught our eye. It wasn't a overwhelming volume explosion as much as it was some interesting sizable paper in one direction that caught our eye. And in order to find this bad boy, you got to scroll down a little bit. That's kind of thematic for our odd block today. We're talking a lot of longer term paper here in the old odd block. In particular, what caught our eye was a vertical out there in good old January of 2017. In particular, it was the 50-60 call spread that I'm looking up here. For some reason, my analytics are giving me a hard time today, so we're just going to go straight up. What we have here on the site as I try to figure this out over here, it was indeed the Jan 50/60 vertical going up about 64, actually about 5,000 times in the first block, and then a little bit more going up the second time. In particular, we've got about 50,000 going up on this one. Actually, Mark, I think this one caught your eye today. So while I figure out what the heck is going on here with my screens, why don't you run us through what you saw here in good old Marathon Petroleum Corp?
Yeah, they did 2 blocks, 5,000 and 45,000. They bought the January 2017 50/60 call spread. They paid $1.35 versus selling the 60 calls at 20. Net $1.15. Appears to be a long-term play on some continued oil recovery. Marathon's had a nice run. They had about 8 months for this thing to rally another 50%. And, it sounds like a lot, except for this was like an $80 stock less than a year ago. So not beyond the realm of imagination. And, if the S&P is going to rally here this year, names like Marathon, Exxon, they're all going to have to move back toward some of the highs that we saw prior to oil taking a year off and wallowing in crapulence like it has been.
Wallowing crapulence. I like it. A technical term, if ever there was one. The crapulence of crude. Perhaps we have a title for our episode. I wonder if iTunes will flag that. All right, let's move on to our next one. I think we've got everything sorted out over here on this end. Going to move on to a newcomer on the old odd block. Always nice to see some new names rolling in, literally in this case, into the old odd block. This one is Tronox Ltd, ticker symbol TROX, TROX. Sounds like a name out of a science fiction film. This one closing today, $7.75, up about a quarter, a little over 3%. This is the name that typically does, on a good day, 600 contracts. Today, doing nearly 28,000, about 488 to 1 calls over puts. That should give you some indication, listeners, of exactly what the heck was going up out here. In particular, it was all calls all the time. And once again, long term. In particular, once again, our focus is brought out to January, Jan 2017, where we first saw about 15,000 of the Jan 10 calls going up, followed by, about 12,000 or so of the Jan 8 calls. We saw the Jan 10s going up for $1.125, and the Jan 8s going up for about $1.82 or so. Looks like, given the open interest of about 15,000 on the Jan 10s, which is close to about what we saw going up on our screens today, that it looks like paper closing on the 10s, rolling down to a somewhat more relevant strike, keeping the love alive, just keeping it a little bit closer to the fire. Like I said, the stock closing about 7 in the orders today, so that 10 handle, even all the way out in January, not looking too relevant anymore. The 8 handle, of course, at the money, a lot more relevant. Will deliver a lot more bang for the buck, too, if and when this name does indeed pop to the upside, like our friend here is clearly predicting. Didn't see any stock or anything else going up with this trade. And looking back a little while, don't have to look back too far. Look back about a year to May of last year to see this name was printing around the 18, 19, all the way up to 21 level. So this 8 strike could indeed be poised for some significant upside if the move this guy's looking for does indeed come to pass. Of course, ever since about Q3 of last year, this name has kind of been vacillating in about the 4.5 to about 7.5 range. So if that indeed continues, then even rolling down to the 8 strike isn't going to help this guy. He's going to need a lot lower than that. Either way, interesting stuff. Once again, Mark, we got some long-term call love here, this time in a newcomer in TROX. So what caught your eye out here, sir?
Yeah, doesn't TROX sound like something you'd call one of your fraternity brothers? Yo, TROX, get over here, grab the brewskis. It was a new one, and, the guy had a position in the past, and I think he just wanted his delta right here, as opposed to, having to wait for a rally. sold the 112 kind on a bigger ratio. My guess is to try and keep it, have less premium in the trade, and that's really what pushed him. But that was kind of what I saw.
All right, yeah, TROX sounds like it was the sequel to Chud back in the 80s or something along those lines. All right, one last victim, celebutante, call them what you will out here in the odd block. This is Kilroy Realty Corporation, ticker symbol KRC, closing today, about $63.62, off about 20 odd cents or so. It's not a huge underlying move day. Decent day in the options, though. This name does about 400 contracts a day. On a typical day, doing about 21,000 today, about 6.5 to 1. Puts over calls this time, about 18,000 puts going up versus nearly 3,000 calls. So that'll tell you where we saw the love out here, or perhaps the lack of love, if you're the underlying bull out here. Don't have to go that far out to find these trades. In particular, it was the May 60 double, aka 55 put spread that caught our eye today. Paper coming in and just pretty much gobbling up this spread for fairly decent size, doing it about 9,000 times, paying 65 cents for the May 60 put, so straight up lifting the offer there. These things are 30 cents at 65 cents. He wasn't playing around. He said, I need to get 9,000 of these done. I'm lifting the offer. Done. And then in something of a head scratcher, he turns around and sells the May double puts for a nickel. So hitting the bid there. Those are a nickel at 45. Just an interesting execution on this trade, doing the whole thing for 60 cents. You got to kind of wonder about selling that second leg, if that's really worth it. I mean, the commissions alone on 9,000 are probably going to come close to dwarfing whatever you're getting for that nickel. But still, an interesting one. Clearly, our friend here positioning for some near-term downside, probably sitting on quite a bit of stock, and he's concerned clearly about that 60 to 55 range, or perhaps could be a straight-up outright spec as well. Looking here at the previous year for good old Kilroy, aka KRC. This one's had a fairly turbulent year as well. About a year ago, was floating around in the 74, 75 range, and then really took it on the chin back at the beginning of this year, right at the start of all the market turmoil in January. This one had looks like a pretty resoundingly negative earnings report, and took it on the chin from about the high 50s all the way down to about the mid 40 range, and was kind of bouncing around there. Has had since then quite a rebound, so it seems like it was aggressively oversold coming out of those earnings, because it's rallied from about the 45 or so handle all the way to today about 63 and a half. So our friend here perhaps concerned that near-term rally is a bit overbought, and he wants to protect himself again. We are coming into earnings season yet again, so our friend here perhaps concerned that yet another dismal report could be in the future for KRC. He's concerned, but not too concerned, to keep him from selling those double puts for a whopping nickel. Mark, I'm sure you have some thoughts on this one. In particular, that second leg, coming out there and selling 9,000 of those for a nickel. I'm trying to imagine a scenario where you would entertain that.
Understand the second leg. I mean, he basically gave up the entire bid-ask spread on both legs. I mean, the trade, as soon as he executed the trade, that 9,000 lot marked 50 cents in his face. So he's already out, 450,000. What was that, $45,000 or $450,000 on that trade? And I don't understand why. Maybe he couldn't get 9,000 done without doing the other leg. That would be the only reason why you do that, is so that to offer your market makers some sort of hey, I'm not totally going to screw you guys. But if you really think the stock's going to drop like that, why not pay 70 or 75 for the, and just pay through the offer on the 60s, then turn it into a huge spread. I mean, it just seems like a much better play. I don't understand it.
Yeah, this one is just a weird one. I think your son there likes it too. I can hear him giggling in the background. But yeah, this one's a weird one. Kind of wondering if you are worried about such a catastrophic near-term turnaround in the stock, why you would even bother selling those doubles unless you really like your broker. You want to give them some extra commissions. Either way, a bit of a weird one, but we'll keep moving. We're going to keep an eye on some of these earnings as well. Well, also, because it's Thursday, we'll give you guys some time to shine on the program with an extra special edition of the Mail Block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block. Like the name implies, this is indeed the portion of the program where you guys get to take the reins of some questions, some comments, share your insight with us, as well as with your fellow listeners. You guys can do that a whole bunch of different ways. You can do it via our website, of course, social media, Twitter, Facebook. We're at Options on Twitter, The Options Insider on Facebook, or Options Insider on Stock Twits via the old-fashioned way of email, questions@theoptionsinsider.com, or the newfangled way of sending us your live streaming comments. So if you're in the chat room, you can ask your questions live. Tuning back in, checking in mid-show checkup here on some of these names. Microsoft extending its run slightly to the downside, off about 280 or about 5% right now here, with good old SBUX off right around about similar levels or so, off about, let's see as we refresh here, nearly $3 are coming up on 5% there, so slightly off there as well. And as we come in on ye old GOOGs, as we wait for everything to update here yet again, seems like perhaps it is catching a bit of a bid back here. As we were saying before, it was slightly outperforming to the downside. It was off, I think it was about 39 and change. And here we are. It seems to be rebounding a little bit, only off about $31 and some change now. So off only 4%. So a little over 4%, but a little, about 8-handle recovery out there in good old GOOG land. We'll see if that continues after hours as we keep on moving into your questions. Let's see how many we can get to today. I like when you guys get to get your questions asked, and you guys send in quite a few of them. Let's kick them off here. Nick C. He wants to know, have we heard any chatter about the CME or CBOE leaving Chicago? That one was a card a CME played to pretty decent effect a couple of years back when they were looking for from some tax breaks here from the city of Chicago. They kind of played that card saying, hey, we're the Chicago Board or Chicago Mercantile Exchange, but we can pick up and move somewhere else if we don't get what we want here. It seemed like a bit of a hollow threat to me, to be precise. They really were at the time even more inextricably linked to the local infrastructure here. They still had the trading pits going, and they still had a lot of activity. They closed the futures side. The options pits are still going. So some of the in-person trading side has mitigated somewhat, but they still have all their staff, all their team, all their facilities. Everything is here. Most of their customers and ecosystem is here. Same thing for the CBOE. So I have a hard time seeing. Plus, their name is linked to Chicago. You can't pick up and move to Indiana or Iowa or wherever else they were threatening to go. And probably a lot of their clientele and certainly a lot of their customers, or I should say their employees, probably wouldn't want to follow suit either. So I don't think, and to answer the question directly, no, I have not heard anything about them wanting to leave again anytime soon. I think that was a one-time kind of play on their end. I don't know, Uncle Mike and Mr. Greasy Meatball, have you guys heard anything new on that front, or are we pretty much hopefully done with all that?
I haven't heard anything.
I hear that.
Oh, go ahead, Mark.
I've definitely heard that, it's basically if you put a transaction tax on in Chicago, we're moving. If Illinois tries to raise income taxes again, we're moving. There's some grumblings that CME would like to move its C-suite to Houston. I don't think that'll ever happen. Although, it's interesting. They're going to be dumping a lot of their old NYMEX staff, and they got to figure out what to do with that because they're closing the New York Merc. So, what's going to happen to all the people that work there? And, they now do have some things that they can they got to figure out. But the rumor has always been that Duffy wants to move him to Houston, but I don't know that that's true.
Mike, you were saying?
Yeah, I think that at risk of not sounding too political here, I could see it go. You could still be the Chicago Mercantile Exchange if you're in like Hammond, Indiana, or something along those lines. Just like the New York Jets and the New York Giants are in East Rutherford, New Jersey. So it's definitely possible, but I think that would be It's the CME, it's the Merc. They're going to look at risk reward. They're going to be very efficient in determining what makes the most sense for them to do. If the taxes aren't exactly in their favor, they still, I would think that they would stay, but Illinois would really have to raise taxes, and they'd have to really, really, really tick them off to make them want to move, I would think.
Yeah, transaction tax. I mean, if they decide to go that crazy, insane, throw the baby out with the bathwater move of having some sort of local statewide transaction tax, that may indeed be the straw that breaks the camel's back, because that's just completely insane. But aside from that madness, you're right. Even then, I think they'd have a hard. They negotiate. They'd have a hard time picking up and moving. Even though maybe Houston, with all of the focus on energy these days, may be a hot place to be. But who knows what's going to happen in the oil market down the road, and you pick up and move to Houston, and then oil quiets off again for another decade. It wouldn't be exactly the mecca perhaps you want to be in going forward. Another one coming here. This one comes from Bob. No handle, just Bob. He writes, "Hey, is the options market the most transparent financial marketplace?" We got a lot of interesting and subjective questions coming in today. This one's an interesting one. I would argue, just listen to the segment we just did, the odd block, where we pretty much just spent a great deal of time breaking down and trying to intuit exactly what the heck is going on in these particular trades and intuit the intent behind them. So I would argue that the options market is one of the least transparent out there for a number of reasons. You have the Delta One products, the stocks, the futures. It's pretty straightforward to kind of determine the intent behind a lot of those trades. Someone's long a future, short a stock. You kind of know which way they're leaning, what they want to happen in the underlying, except for a handful of scenarios. Options, it's nowhere near as straightforward. You have trades going up. You look at what we do every day on the network and indeed on this website. You can't just look and say they bought calls, aka they are bullish in the stock. You have to look at what happened in the underlying. Did a huge underlying trade go up? Maybe they sold shares against that call purchase. Now they did something entirely different. Maybe they did it on a ratio. Sometimes that trade goes up mid-market, so you have no idea what the heck they actually did. So you have to dig into the implied volatility on that strike and say, hey, did it actually go up or did it go down? That can give you some indication. I say some, not all, of what they perhaps actually did. And then again, you don't really know the counterparties. You don't really know what they have on. In addition to that, they may be trading against. So there's a lot of questions out there. And what do we always say on the show every week? Also, we have to say wait for the open interest to update. That's probably one of the more frustrating things. We put up trades in this marketplace now in a sub-second capacity all day long, yet we have to wait a full day for open interest to update. That's outdated, I think, to be charitable. So all those things, I think, combine, and also the fact that, hey, look at all of the quote-unquote insider trading that goes up. The lion's share of that still goes up in the options market. And there's a reason for that. The leverage, all the other things, as well as the fact that the oversight in the options market still isn't as good as it is in the equities realm. And it's a little easier to disguise that stuff because the market is a little bit more opaque. So all these things kind of combine to make options, I think, one of the more opaque financial marketplaces. We love them. We spend all our time talking about them. And if they were a little bit more obvious, maybe we wouldn't have to do as much unusual activities. Maybe that'd be a bad thing for us. I don't know. But yeah, I think even though we like options, and all of us here spend a lot of time in them, they're not exactly the, I think, most readily transparent from a information flow standpoint. Mark, you look at a lot of unusual activity throughout the day. Would you concur with that, or are you on a point-counterpoint kind of mood today?
About over-the-counter trades and flex options and things like that can really move paper. And so, yeah, there's lots of opaqueness that's out there. And so, I tend to agree. I do not think that options are the most transparent industry in the world.
Yeah, I didn't even get into OTC. That's That's another wrinkle to the conversation. I was just talking pure listed. If you want to get into OTC, that's an even talk about opaque. We have no idea what the hell's going on up there in a lot of scenarios. So yeah, leaving that aside, just looking at the listed, where you can maybe readily expect some transparency, even there, the options market I think falls short quite a bit. Uncle Mike, do you concur, or are you going to take a vehement opposition to my views, sir?
As much as I enjoy taking vehement oppositions, as well as claiming umbrage, I think I'm going to have to concur on this one. I think you guys summed it up very well.
Yeah, not a lot of room, really, unfortunately, for debate on that one. I wish options was transparent. I think if they could, we've talked about this in some of our tech shows, like in some of the underpinning issues that are keeping them from updating the open interest on a more frequent basis, maybe at least a few times intraday or something like that. That's just to help that process along. We're talking about millisecond and microsecond executions, and yet we have to wait a day for open interest to update. It's kind of mind-numbing and certainly confusing to a lot of newcomers to this marketplace who say, I don't get, that seems to be a clear juxtaposition between those two extremes. And I agree with you. I'm with you. So, yeah, there needs to be some work done there as well. I think a lot of people, the trading firms, the clearing firms, others are kind of pushing back on that. There's a lot of hurdles behind the scenes to why that hasn't happened yet. But hopefully if that changes in the next few years, we get some more frequent OI updates. That'll at least lend a little bit more transparency going forward to this marketplace. All right, we got another one coming up here. This comes from Willy. No handles today. No other names or internet acronyms. Just Willy. He writes, what does the option block crew think of the TOS platform, Thinkorswim? Do you like it for pricing volatility and analyzing the Greeks? Well, we're pretty familiar with TOS here. In fact, until not that long ago, we did a show every day, beamed live into the TOS platform. We had to use that platform for finding a lot of analytics and metrics and things like that, as well as, of course, beaming into the chat rooms over there. So we're pretty conversant in that platform. And yeah, it does fairly well for a lot of things. I think for the Greeks are kind of, that's kind of low level. I think most platforms should be able to handle a decent approximation of the Greeks for you on your different positions. I wouldn't really use that as a huge barometer of how good a platform is. Volatility is a little bit more subjective. I think no matter what platform you look at, you can find people who are going to raise their hand and say, I take umbrage, as Uncle Mike would say, with how platform X calculates or disseminates their volatility. So everyone's a little bit different. I don't mind TOS. Some people have their detractors of it. But I found it to be pretty good. I think even moving beyond that stuff, I think you find a lot of rubber meeting the road in some of the other things they have. The TOS spread book, I think, is second to none in terms of looking at a lot of that activity and finding out a lot of this stuff we're talking about here, on these types of shows, talking about activity and unusual trades and things like that. If you want to start searching around and find some interesting activity that you can then look at or see what else is going up in a particular name, that's a great tool. So I think some of the ancillary tools are now where a lot of the rubber meets the road for a lot of these brokers. Most of them have these kind of basics, the Greeks and stuff like that, pretty much down pat. If they don't have that, then definitely jump ship. But yeah, the other stuff, and again, I like the TOS platform. I think there's some other ones on here that we like. We used to work with OX a lot. Their platform is pretty robust as well. They also have over there the Viceroy's former baby, I'm forgetting the name of it right now, Idea Hub. So they actually have some trade recommendations on there. You may or may not like that, depending on your views on that. But it may be a cool value added for that. Also, UI comes down to how you like the UI layout. Some of them are more intuitive to use than others. If you do a lot of if you're an Iron Condor guy, for example, they make it really hard for you to execute those types. You have to enter every leg manually versus a simple drop-down Iron Condor. Little things like that could be the difference in the viability of a platform for you. That's why we always recommend to everybody before they really move accounts that they check out a paper trading version so they can see kind of the UI for themselves, get a sample of the tools and the features, and really kind of get a good handle on whatever platform it may be before they jump onto it. But yeah, we like TOS. TOS is fine. OX, you can't really go wrong with them. IB has a good platform as long as you don't mind not really having any sort of customer service incorporated there. Then that's the case. If you're a high-end trader, and a lot of you guys listening to this show are, then IB certainly is a good one for you, and certainly from a pricing perspective, they're kind of hard to compete with. I know, Uncle Mike, you use a lot of different platforms. You like TOS and IB. So what do you have to say here for our friend, the not at all acronymed Willy?
I'm going to give you a little bit of platform history right here. About 10 years ago, I was working as the director of education for Options Express. And it was right about that time to where in the retail world, Thinkorswim was starting to beat out Options Express as being the number one platform. There was a time probably in 05, I would say, was when Options Express peaked, and it was the best game in town, the only game in town. And I remember being at a trade show one time to where I'm working the booth, and we had opened hundreds and hundreds of accounts that entire weekend. It was just insanity. And people wouldn't leave us alone. It was basically, we were the Beatles is what it felt like. I think I had talked to more people that weekend, and people seemed more in awe of me, and I was just just a rookie salesman for the company. I think I felt more like a celebrity that weekend than I ever did playing in the NFL, for crying out loud. And so it got to the point to where at the end of the weekend, I'll never forget, this one lady was just being rude to me. I was trying to pack up my stuff so I could catch my plane, and she was just being rude to me and said, "I want to open up an account right now, and I'm the customer. I want to open up an account." So I was politely said, "Well, here's the go online. This is how you do it. I can't set up my booth right now because we got to go. We got a plane to catch." So she was being persistent. So finally it got to the point to where I said, "We don't want you. Go away." And it takes a lot to get me to that level to where I'm yelling back at somebody. I'm usually a pretty patient guy. And so she's like, "Oh, this will never work for your company will never survive." So she walks away, goes to the competitor, comes back, apologizes to me, and asks me for the information again. So it was at that point, and there was another morning to where there was I think it was not a money show, it was some other, I think it was an Invest Tools conference. This is before Thinkorswim bought them, to where people would be taking pictures behind our booth so they could have the Options Express picture with them by the Options Express booth. And they all thought it was the coolest thing ever. So at one point, Options Express was the best and the only game in town, and Thinkorswim just gradually beat them out in the retail world. Now, fast forward a few years, as time went by, Thinkorswim was clearly the leader in the retail world for the option platform. TD Ameritrade bought them, and they still continue to use the Thinkorswim platform. Right now, I use the institutional version of Thinkorswim called ThinkPipes. It's very similar to Thinkorswim, and I'm very happy with it. I also use Thinkorswim for certain things, but I like it for everything that I'm trying to do. It has its limitations, but for what I'm trying to do, I'm not quite as short term as Mark is, and I don't do anything with the VIX. So for my purposes of hedging long-term investments, Thinkorswim gives me plenty of firepower and then some. So I am a fan of them. I don't use IB, although we do have some clients that you do still have some clients there, but I don't personally use IB for my own analysis. But if you're looking to save money, and you don't have, and you're not trading under the RCM umbrella, which, by the way, we do have a great deal if you want to trade under our umbrella through Thinkorswim, but I digress. Then IB is not a bad spot to be. Customer service, it's not quite as good, I don't think, at IB as it is at Thinkorswim. And then another up-and-coming broker that, in a lot of ways, it's the same people from Options Express, Trading Block. Vlad and the boys, they're trying to kind of recreate Options Express from everything that I can tell. Ever since Schwab bought Options Express, it's really not quite the same anymore. But Trading Block's another firm that they're new and they're improving, but there's someone to check out as well. So with all that, hopefully that can give you some information on the Thinkorswim platform.
And Mark, I know you're a fan of, you like the formerly Live Vol X, now it's the Lightspeed platform. That's your platform of choice, correct?
Well, it's the main one I use, but my big criticism of Thinkorswim is I think the UI is old, and it is a complete resource hog when you're trying to use it on a desktop. And really, I think the most egregious thing is that I've been pointing out to them for now going on 10 years that you don't use the cash index for the underlying in cash index options. So things like SPX, VIX, the Russell 2000, you name it, they're borderline untradeable using the Thinkorswim platform because you can't get a proper Greek out of them, especially with VIX. VIX is an absolute nightmare to trade on their platform, and that's kind of, I think, my probably my only real major issue with them. And that, like I said, I think that the platform's getting a little old and tired, and they've done a lot of investment into putting up some pretty charts and not really done a lot to the bones of it. Now, I think it's getting a little bit of osteoporosis in its age.
Yeah, I can certainly concur from a resource hog perspective. Running that kind of massive application does seem a little bit dated in today's modern environment. Everything's kind of just straight HTML5 streaming through a browser or something like that, and having to fire up this big resource intensive thing to do a lot of the TOS stuff. You're right, it does seem a little bit dated. And also I could second the UI issues as well, because it isn't, sometimes if you haven't been using it for a decade, it could be not that intuitive to newcomers coming to it. But that said, and if you don't trade a lot of VIX, then you might be happy with that one, or some of the other ones Uncle Mike mentioned as well, including our friends over there at Trading Block as well. But it's time for us to keep on rolling. Great questions, everybody. We got to as many as we could. We'll get to more next week. Keep them coming. If we don't get them on the show, of course, we'll answer them via social media or wherever else you send them in, website, email, etc. Meanwhile, it's time for us to keep on rolling into our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. Like the name implies, this is the portion of the program where we tell you what we're keeping an eye on for the week to come. And before we look ahead, let's look at what's still happening right now. Check in with our names that are reporting here after the bell, at least some of the big ones. Good old GOOG splitting the difference now, off about $36, or about 4 3/4% or so. So not as far off as it was, but not also in rally mode again either. So kind of splitting the difference there. Hovering around about 57 in the orders for a good old SBUX, off about nearly 290, or about 4.7% out there as well, and off just a little over $2 out there in good old softy land, or about 3.7% as well. So mitigating some of these extreme moves that we saw, as usually is the case in a lot of earnings. The first blush, not always the way that things are going to play out. Speaking of earnings, the earnings do continue tomorrow. If you're active in Caterpillar or American Airlines, those names coming out tomorrow. GE as well, so a lot of big manufacturing and machinery equipment coming out there. Honeywell, Kimberly-Clark, and good old Mickey D's, if you are so inclined to pick up a burger or two. And as Mickey D's goes, so does the economy in many senses of the word. So a bit of an important one there. But it is nice. I agree with you, Uncle Mike. It is nice to be talking straight up earnings again, and not what will Yellen do or what the heck's going on in China. There's something refreshing about that. That said, I'm going to toss to you now. You're probably going to say you're worried about China, so or maybe Miss Yellen. So what are you watching for the rest of the week into the weekend?
Oh, I'm always worried about China and Miss Yellen, so that's nothing new. But no, I like these. I want just continuing to watch earnings, as you said. I want to see how things go. S&P, we're hovering around all-time highs again, the 213 SPY 213 level. If we can get 214 on SPY, I think we might have a case for the bulls to continue on the rally with which we've had, but we got a big step to get to that level. So watching the numbers as always. And GLD went below 120 today, and I shouldn't say went below, it stayed below 120 today. It couldn't quite stay above it. So I think that we're facing some pretty tough resistance in what we have going on right now. And then right now, today is April 21st, and I'll just be watching the Apple earnings coming out here in about an hour or so.
Yes, exactly. I forgot to mention that at the top of the show. Apple, for some reason, way after the bell today, but c'est la vie. All right. And if you're curious and concerned in the chat room, yes, we are joking, listeners. All right. And bring us home, Mr. Greasy Meatball. What are you watching for the rest of this week into the old weekend?
Yeah, you've got your Apple. You've got more earnings going on. I am watching that kind of 2,100 level in the S&P. I'm watching the VIX, which is, settled at a unreasonably low level yesterday. And then is back near 14. We didn't even talk about the VIX screw job. I'm looking forward to that one tomorrow on Vol Views, Mark. And then we, so those are kind of the things that I'm paying attention to. Additionally, I think that, is there some things in Europe and China, and then finally Brazil? What's up with Dilma? Is Dilma done? Is Dilma dead? Or is Dilma doing it again? That's the question.
Another week, another VIX screw job. Yes, we will indeed get to that on tomorrow's episode of Vol Views. So if you are so inclined to join us live, tune in noon Central, 1 p.m. Eastern, and listen to us break down all things VIX screw job, as well as everything else we talk about. As well as, of course, come back at 3 p.m. for the week in futures options. We can look back at all the fun stuff trading crude, gold, corn, and all that fun stuff. But as the music implies, that's it for our show today. Let me check back in really quickly. Each of my cohorts here on the old All-Star panel, see what they have cooking that may interest you. Starting off in the land of the two saws, a.k.a. RCM Alts, I think you're calling it now. What's cooking over there, Uncle Mike?
Oh, we call us whatever we need to be called. That's the way it goes. If you are interested in trading under the RCM umbrella through either Think or Swim and or Interactive Brokers, contact me. We get reduced commission rates. And obviously, it would have to be new money coming in. You can't just flip your account. It doesn't really work that way. But if that's something with which you're interested in doing and having the ability to call us and ask for advice, we'd be happy to help you in any way. Now, we do charge a small fee, but 99.9% of the time, the savings you get from the commission is mitigated, or the fee is minimal and compared to the savings you get on the commissions. 312-212-3531, or send me an email at m2saw@rcmfs.com.
I'm still waiting for you guys to go for my slogan that I've chosen for you guys. Let me roll your puts for you. The Uncle Mike slogan. I like that. So that should be on your business card.
I do too. I think that's a good one.
Speaking of rolling, I think the Greasy Meatball is about to roll off his chair. So before he does, Mr. Greasy Meatball, what's cooking in the land of the pit?
You know, we're doing we've been doing a lot of really good blogs lately. Go to optionpit.com/blog, review what we've got out there, and make sure you visit the blog every day, because we're going to put something actionable and usable for the reader just about every day.
There you go, listeners. Actionable and usable. Check it out over there at optionpit.com. Click on the blog, and you are good to go. And like I mentioned, tune in tomorrow, Vol Views, noon Central, 1 p.m. Eastern. And TWIFO, This Week in Futures Options, 3 p.m. Central, 4 p.m. Eastern. If you can't join us live, don't worry. We still like you. You can find those shows wherever you find your favorite Options Insider Radio Network programs. And on behalf of Uncle Mike and the Greasy Meatball, and indeed myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing, for sending in such great questions. We love to see what you guys have on the brain, and it's all kinds of crazy stuff, and we love it. And, of course, for tuning in live, we love you guys as well. And we'll see you next time for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.